So how does the overall portfolio look like at a broad level? Like what percentage in what instrument?
60% is in equity, 20% is in FD and bonds, and the remaining 20 as of now is in P2P.
There are now new instruments called fractional real estate. Then you have REIT, gold.
In the 60% component of equity, there lies REITs and InvITs also. I started with 100% in equity only. As the capital grew, so to basically keep a safe asset, we invested in FDs, and to hedge, I should say, hedging is being done by P2P.
How do you decide this is that instrument you should go for?
I mostly follow invest and forget, like investing in a very good company, looking at it yearly or quarterly, how's the growth happening, how is the management thinking.
For someone who's watching this right now and has a lot of savings and in safe instruments, what one challenge would you ask them to take?
I would say that put that money to work. Instead of you working for money, at later years, the money would be working for you.
We generally speak to people with years of professional experience. But our today's guest is someone who started building wealth early in his career. Someone who thinks differently about money. Not just how to use it, but how to make money work for him. Our today's guest has built exactly that kind of a portfolio, different. And the most interesting part isn't the assets you would expect. It's the one most people haven't even considered yet. This is Real People, Real Stories by LenDenClub. I am Rajat, and today we are going inside a portfolio that might just change how you think about yours.
Thanks for inviting me. It feels amazing to from seeing people on the podcast to being on the podcast. It's great.
Absolutely lovely to have you. Thank you so much for joining us today. So Jai, before we get started, to understand more about your financials and how you think about investments in your portfolio, if you can tell us a bit about you, what do you do, where you're from.
I am from Noida. I am in my final year of mechanical from DTU.
Okay, cool. And from very early age, I mean, yet to kind of get into the professional world. You're investing. So how, like, I understand that your family is always into investments and financials, looking at. So how's the conversation at home? Like, do you openly talk about finances? How is it?
My mom is very stringent on FDs and fixed income. So, and my dad is into equity and bonds. So we had a very dynamic topic to discuss. So gradually, when I started to look into investments, I told my mom that this is not that risky. We just need to learn about it and we can invest. So it made sense after all. Like in 2019, I started to invest virtually. Then in 2022, I started to invest in equity and mutual fund bonds, everything. So I started to look on that. Since then, it is more of an upward journey.
Okay, it makes sense, right? When you understand the instrument very well, making informed decision becomes slightly more easier.
Yeah.
Right. So, what is the general philosophy when you're looking at investment in one or two sentences? Like, how do you decide this is that instrument you should go for?
I mostly follow invest and forget, like investing in a very good company and then not, I mean, looking at it yearly or quarterly, how's the growth happening, how is the management thinking. So those are the points which we look at. So after that,
Okay.
yeah,
So, strong financial background,
yeah,
strong company philosophy is some things that you look at.
yeah,
When it comes to equity, I
yeah.
presume, right? So, how does the overall portfolio look like and at a broad level? Like, what percentage in what instrument?
It's mostly like 60% is in equity, bonds. 60% is in equity, 20% is in FD and bonds, and the remaining 20 as of now is in P2P.
Okay. So, have you explored any other instrument, or how do you think about other instruments, like real estate for that matter? Or there are now new instruments called fractional real estate. Then you have
Yeah,
REIT,
yeah,
gold.
yeah, yeah. In the 60% component of equity, there lies REITs and InvITs also. So by REITs, we invest into business parks and the real estate component, and via InvIT, that infrastructure investment trust, we put our money into that power grid and other types of
Yes.
infrastructure trusts. So it is very diversified in that area.
Very interesting. So, uh, when you're very early in your career or your financial decision making, uh, primarily and mostly people prefer equity because it's widely known and a lot of knowledge available, right? But you mentioning that you explored other instruments as well, which initially we don't really think about, right? It takes some time for us to start to get into those. So how do you learn about these instruments? What's your way of doing research about them?
It's mostly done via YouTube lectures, and there are many reading materials there to study about how many different asset classes are there in equity. So, as I have also worked with the PMS, I gained some knowledge about different asset classes, how to allocate, and which person should take how much risk. So, that all has helped me
Hmm.
in diversifying.
And have you seen those practically work out for you as well?
Yeah, it has been working out great since last 4 years, since I'm investing.
Okay, perfect. So, when you started off, I'm assuming that it also was in equity, and now you've mentioned that you've been investing for almost 4 years now,
Mhm.
right? So, how has it evolved over time? Like, with equity, then what kind of instruments did you keep adding on top?
In equity, I am mostly bullish on construction and energy infra. And in beyond equity, we are having FDs and bonds. Bonds is in a very reducing stage right now because bonds is something my dad used to do, and it is a very tedious task to invest in bonds. There is secondary market to invest and look for, and even the bonds returns are not that feasible when you look into product like a P2P. So the bond is reducing and P2P has been rising. That is how it is evolving. Like when I should say I started with 100% in equity only.
Hmm.
Then as the capital grew, so to basically keep a safe asset, we invested in FDs, and to like hedge, I should say, hedging is being done by P2P because hedging is also an important thing to do in a portfolio. P2P has like last 2 years we have seen it is very negligible returns in the equity market. So that P2P has helped the portfolio to evolve and get to a bigger number.
Okay, so now coming to peer-to-peer lending, how did you discover? When did you discover? What did you feel when you came to know about the concept?
When I came to know about P2P, it felt very different as a asset class. So I came to know about P2P back in 2023.
Okay.
And other companies I have invested in. Then I came to know about LenDenClub in 2024, and since then my portfolio has been rising and it is giving me consistent returns.
Okay. But generally, when you come to know about a new instrument, especially when it comes to giving money to a stranger, right? You want to do a lot of research, a lot of due diligence. So how did you realize that this is something that where I can put my money or take a bet on?
I mean, in many places there are things like where you give money to people at 1% a month. So it has been going on since a long time. P2P is just a like safe haven kind of a thing. It is also RBI regulated, so I have backings, and it has evolved a lot over years. It's not as unsafe as it was. It wasn't unsafe at all at starting, but it has a lot of safeguards right now. So it feels pretty safe to invest in P2P right now.
Okay. Uh, if someone was, watching this show today, what parameters would you ask them to evaluate before they decide? So P2P lending is definitely as an industry. You're saying you have done all those research.
Hmm.
When it comes to selecting which platform to invest with, what parameters should a person look at before they decide this platform is something that makes sense for them to go ahead with P2P lending?
Uh, First and foremost should be the borrower base. If the platform doesn't has a lot of borrowers, so it should be a red flag
Hmm.
first. And then after looking at the borrowers base, we should look at what all features and what all safeguards the platform is providing to the lender.
Hmm.
So looking at that, we should invest.
Fair point. So now let's get into the numbers. You have been investing with LenDenClub for almost 2 years now. What kind of returns have you seen, and how does it compare with other instruments that you invest with?
I have seen around 18 to 20% of returns.
Hmm.
In manual lending, it is somewhere around 18%, and in lump sum lending, 21% is given.
Hmm.
So it has exceeded the uh, returns that you show on the app, around 15 to 18%. So it has been on the upper end of the
Hmm.
returns.
And I've looked at your portfolio, and you have NPAs as well.
Yeah.
And these returns are after all these NPAs,
Yeah.
all the fees that the platform has taken. So when you start to see your NPAs for the first time, start
Mhm.
showing those numbers, how did it feel? Did it feel normal? Did you feel scared initially? How was your reaction?
I mean, this is the drawdown of this instrument. NPAs would be there if you are giving any loans. So NPA would be there, but if you are getting around 25% as an interest and then 5% NPA is there, you still are having 20% returns. So it doesn't matter at all, because when you get to a when you get a huge borrower base, so the NPA are negligible to the returns.
Right. And what we personally have noticed on the platform is that when you're diversifying across hundreds and thousands of borrowers,
Mhm.
it starts to make even more sense that even if it's with slight bit of an NPA, you end up still earning good returns.
Exactly.
Yeah. So how many borrowers have you invested in?
Somewhere around 6,000, 7,000 borrowers.
E- Does it feel natural, like even when it comes to stocks or mutual funds, right? There's still a number of companies you can invest in. When it comes to peer-to-peer lending, you can invest in thousands of borrowers. We have lenders who have put in money in 40,000, 50,000 borrowers, right? So how does it feel like the kind of diversification that is available? It feels unreal to
Yeah.
be honest, from the outside,
Mhm.
but when you're in the system, it starts to make sense. Yes.
Exactly. It is all about diversification. I mean, the more number of people you give out loans to, the less the number of defaults would be the same. But the NPA would start to look at the natural. Like if we invest only into 10 borrowers, there might be 8 of them that are defaulting. But if you invest in 100 borrowers, only 16, 20 of those which comes around,
Mm.
for maximum, if you invest a lot, so the NPA would start reducing and the capital erosion would be very negligible. And the more you do, it it starts making sense.
So we were talking before the podcast, and I was telling him that what we've noticed is that we categorized, our lenders into three buckets: people who lend in less than 100 loans, 100 to 500 loans, and more than 500 loans. And what we noticed is that people who invest in more than 500 loans, the number of default goes down drastically.
Mhm.
If possible, we'll share the details of the report in the description so you can look at it. But yeah, diversification definitely helps. And
Yeah.
not only in terms of number of borrowers, but you have multiple ways of diversification. You can invest in self-employed
Yeah.
borrowers, salaried individuals. You can invest in 3-month loan, 4-month loans, 5-month loan, 6-month loan, 12-month loan. So the diversification in terms of numbers is definitely there, but also the variety of diversification you can
Yeah.
do.
I mean, it's an amazing thing to have a control over who I am lending to and what tenure I am lending to. If, say, I need to invest for around 6 months, I have a lump sum amount and I need to invest it, and I need the money back in 6 months, 7 months. So, it's great to have that option that I would be having uh, I would have put that money to work in those 6 months also. And if I am a regular investor, I would choose 12 months or according to
Long
anyone's
term.
wish. Yeah.
Yeah, yeah, okay. So generally, what's your strategy? Does it look like? Like, do you put in a specific type of tenure, specific type of borrower, or do you prefer generally, a number of people as a general strategy? How is that like?
At once, I try to lend to more than 100 people.
Mm.
It's more of a 50-50 split between the short term loans around 3, 4, 5 months, and the long term 12 months, 12 months being split into salaried and non salaried and stuff like that. It is more of a random thing to do,
Hmm.
not very strategic, because it, as I used to do a strategic quickly like looking at the Excel sheet, what the NPAs look like of the specific tenure. I mean, it was more or less the same. So to get out of that headache, I just do it. I select 100 loans and I invest in that.
Because from the outside, and it is true that we, for example, if you're investing in equity, you look at a company, the fundamentals of the company, like you mentioned, financial of the company, historical information of the company. But when it comes to borrowers or individuals, right, it works slightly more differently than how it
Yeah.
works for stock market. So because you have people are behaving, you don't know what kind of financial situation they might fall into tomorrow. They might have good intention, but they're not able to still repay. They might delay. So a lot of factors, if not volatility or market link factors, but there are still some factors which might impact. So what we keep advising our lenders also is to diversify as many borrowers as possible. Diversify across tenures, keep re-lending, and you have noticed that. So statistics say that if 100 rupees of repayment comes in back in a month to all the lenders,
Mm-hmm.
125 comes back into the platform.
Yeah.
That means a lot of people are not only putting money of their principal that they have received, but adding more on top of it and then giving investing. So that gives them the confidence that okay, my money is coming back, and make use of that,
Hmm.
right? Which is great. Cool. So if someone's deciding whether to go for P2P lending or not today, what advice will you give them? How should they decide? Should they go for it? Should they not go for it? Is that right for them? How should they really make that decision?
I mean, when I started, it was a new instrument for me to begin with. So you should start gradually, play around the app and play around what the how this works basically. Then if you get confidence, which you would be getting, then you up and up the investment and make it a like from being a satellite part of your portfolio to being a core part of your portfolio. It would be a gradual shift, but yeah, you should look into it.
Yeah. And how do you reinvest? Do you put the principal back, interest only, principal plus interest, or principal plus interest plus more principal? How's that?
Right now I'm having a separate bank account which I get the repayments into, and
Sense.
however much the money comes, uh, I just put it back into the app, and I try to get it to a big number before I put into the lump sum. Or if I'm doing it manually, I just do it instantly.
Yeah. We were so uh, we recently launched a feature because there were a lot of requests from our customers where they want to understand the repayment summary that they have received in a particular time period. So how does that feature help?
It is a great feature to have. I mean, you can see how much you are getting at the end of the month, and you can also see how much it is quarterly, 6 monthly.
Yeah.
It is an amazing.
And you can also see how much you have reinvested, so you can decide
Yeah.
how much more you need to put back because you have received that amount. Cool. Great. We'll do a quick rapid fire. Yeah. All right. Uh, between equity and mutual fund, what do you choose?
For a passive investor, it should be mutual fund. You don't have, I mean, if you know how equity works, it's good, but you should keep that stuff to an fund manager who knows it better than you.
Yeah. Okay. One stock you will never sell.
There are no such stocks am like stringently stick on. If the company is not performing well, I would just sell it off and invest in a better company when better opportunities come.
One popular instrument that you feel is overrated.
I don't think any instrument is overrated. Every instrument has its pros and cons. So it's what it works best for you is there.
Okay. One investor that you would love to have dinner with.
Warren Buffett.
Obviously.
Yeah.
Okay. Um, in one line, if you have to define your definition of wealth, what would that be?
Uh, Freedom. It gives you time with yourself, with your family. So that is well for me.
Okay. Uh, you, very early in your career, you mentioned that.
Yeah.
Now, what does the future look like? How do you see financials? How do you see wealth building from here onwards?
It's an upward journey. It should be an exponential journey as I have a lot of time to invest. So, yeah, the compounding is called as the eighth wonder of the world for this reason only.
Okay. Um, for someone who's watching this right now and has a lot of savings and in safe instruments, what one challenge would you ask them to take?
Uh, I would say that put that money to work. Instead of you working for money, at later years the money would be working for you. So they should look at other instruments, and if they want to start with low risk, they should start with mutual funds, not the FDs, I might say. And later on, they can diversify into all of the stuffs.
Awesome. Great. Thank you so much, Jay. It was really
Thank-
insightful. And thanks for sharing your insights, how you look at money. I'm sure it has helped a lot of our audiences in making decisions. What I love about this conversation is that it proves something. You don't need to be a finance professional to build a world class portfolio. You need curiosity, discipline, and the willingness to look at opportunities that others haven't discovered yet. Jay, your portfolio is impressive. But what's more impressive is that thinking behind it. So thank you for pulling the curtains. And if you're watching this and you think your money could be working harder, subscribe, because every episode on this show is a blueprint from someone who's actually doing it. Drop a comment, tell us what's your portfolio look like. Let's compare notes, and I'll see you next time.